Alright, today is Thursday, October 15, and this is a post-market review for the stock market activities today. Very interesting day, and as you can see from the agenda, we will cover a variety of topics. Interesting action in the options market, and we do have coverage in the news, updates on the stimulus fiasco, all the COVID updates from Europe, updates from the Fed, tech regulations, the propaganda minister, today's unemployment numbers, and of course, earnings reviews for Walgreens and Morgan Stanley. We also have charts for the SPY, the Qs, dollar index, VIX, the TNX 10 years yield, IWM, Apple, and Tesla. And here we go, the big Dow in the red, down 19.80 points or 0.07%. The Nasdaq in the red, 54.86 points or 0.47%. The S&P 500 also in the red, a decline of 5.33 points or 0.15%. All of the indices managed to close well above the lows. The picture was a lot worse in the morning, following of course big declines in the European markets. So today we had bad news on COVID, bad news on employment, bad news on stimulus, bad news on big tech regulations. No problem. The Robin Hoodiots went all in, Naruto style run, heads first, buying the dip. And of course, in the next few days, they will start asking questions, especially if the market gives up and decline further. But here we go with the sector's performance. The gold medal goes to real estate. Real estate, of course, been lagging all week, and you see the big rebound today. Silver goes for industrials. Good week for industrials so far. And of course, the bronze goes to financials. We saw a bounce from the massive declines yesterday. What about the laggards of the day? Healthcare, technology, and communication services. Moving on to the futures market. Right away, you see crude muted, but the action in crude was critical today. And if you've been watching the chart of crude, you knew right ahead of everybody that we might see buy the dip in the market and a rebound and a recovery very early in the day. Here was a chart of oil, and you see right away the moment trading started, we saw oil catching a bid and almost having a V-shaped recovery from the declines overnight. And that of course illustrates the contrast between European traders versus American traders. Overnight, of course, European traders bet against oil due to the rapid increase and the state of emergency across Europe regarding COVID-19. The American traders, of course, once trading opened here in the US because we're infected with another virus beside COVID-19, and that virus of course is called the donkey mentality. We bought oil, we bought the dip in oil, and of course tonight we will start asking questions whether that was the right decision or not. And of course it'll be very interesting to see what European traders would do overnight regarding oil, and stay tuned for the conclusion of this video because today we've witnessed lots of contrasts and conflicting information and divergences, so we'll sort them all out in the conclusion of this video. But for now, we do have a futures market to cover. Here we go, metals. Mr. Copper in the green. Keep in mind that the dollar index was in the green too. One of many conflicting information we had today. What's going on with lean hogs? Nothing new. Lean hogs, the new tech, marching higher and higher. What's going on with grains? Green across the board, exception of course soybean oil. Soybean oil had sizable gains in the last few weeks, and you see it giving up just a little bit. Softs, we see OJ and cotton in the green. However, coca and lumber reversing the gains from yesterday and trading in the red today. Moving on to the big casino, the options market. Right away, Neo at number one. The gambling in Neo this week was off the charts. Unbelievable. Volume we're witnessing here. 1.78 million contracts traded today, 75% of those are calls. Just heat this morning, there was a massive gamma squeeze throughout the week in NIO shares. Now we're reaching expiration tomorrow, and you have all these option writers who have accumulated lots of NIO shares that they don't need, and perhaps they will start dumping them as soon as tomorrow. Moving on at number 2, Apple with 1.6 million contracts today. 67% of those were calls. Tesla at number 3, 800,000 contracts today. Likewise, 67% were calls. Here are the volume leaders of the day, and you see they're just rounding up Apple and NIO call options for tomorrow. Wild shots, whether they hit or not, they don't really care. These traders are betting on big moves tomorrow. What about the change in open interest? The increase in change, of course, notable here. MU, Micron, the 52.5 calls for December, getting bought aggressively today. And of course, we do have Philip Morris, PM. They're buying the 82.5 call expiring in November. Now, if you remember, we had this trade in our interesting trades slide yesterday, and you see today they're following up, doubling down. So perhaps there is some interesting news coming up in Philip Morris shares. What about the decline in open interest? Right away, you see profit taking here. The majority of the trades happen to be for tomorrow's expiration. They're taking profits off the table in NIO, Tesla, Disney. Nothing to see here. Very predictable behavior, specifically after we saw the declines in the morning today. How about some interesting trades? Topping the list, look at this. Nikola. We've missed this name, and we've missed talking about the scandals of Nikola and their alleged criminal / sexual predator chairman, or former chairman, shall we say, Trevor Milton. But here we go, Nikola, 29 calls expiring next week. This is a massive bet. Somebody knows something here, and perhaps it is worth the shot to follow this trade and buy some of the 29 calls expiring next week in Nikola. What about Pfizer? Look at Pfizer coming at number 2. They're buying the 38.5 calls expiring November 6. Right after the elections, something is going on here. Perhaps they know something about the vaccine, and they're betting for an upside call here in Pfizer shares. Both trades in Nikola and Pfizer worth following, and I will try to do that tomorrow. Moving on to the heat map analysis, right away you see the big boxes at tech muted. They were severely in the red in the morning. However, they were rescued by the buy the dip crowd. And of course, we will ask questions throughout the night and perhaps tomorrow, and we will see the final decision from the market coming very soon regarding a judgment for big tech. Facebook, of course, is the notable underperformer. We have bad news for big social media names like Facebook and Twitter. We will discuss that in the news segment. But you see Tesla also underperforming significantly today. Beer, you see Beer, massive gains last week. This week, they're giving it all back. Uber, we talked about Uber, and I bought the 35 puts in Uber a few days ago, and you see Uber declining, heading to the elections. There's a big decision regarding Uber in the state of California, and a lot of investors will not hold the risk all the way through elections day. We also saw software names. There's weakness across the sector, of course, due to the big massive drop in Fastly shares. And looking at the healthcare sector, you see the biotech and the drugs manufacturers in the red, some severely. We do have Vertex, VRTX, having a problem with one of their drugs, down double digits today, big time, and dragging the entire sector down with it. We do have few bright lights such as Zoom. We talked about the outperformance of Zoom before the week even started. If you watched the weekly outlook video, I predicted outperformance by Zoom this week. You see that happening right in front of you today. And of course, we see Walgreens in the green due to their earnings report. We have banks rebounding, and we do have in the healthcare sector Humana up big today, big insurance company. And of course, we do have General Motors up big today. And we talked about industrials and consumer cyclicals having a good day. beside Amazon. Take Amazon out of the consumer cyclical sector, and they had pretty good, decent day. But let's put more color here and move to the rotation trade. Right away, it is clear that today was an outperformance by the reopening names versus the stay-at-home names. And again, that illustrates the irrationality of the market and the confusion here. Overnight, the market got hit with a variety of news. Our focus was 100% on the stimulus, but overnight we had bad news from Europe regarding COVID and tech regulations, and in the morning we had bad unemployment numbers, and the market's gonna take a little bit of time to digest here all the news and make a final decision. But today was a knee-jerk reaction. They decided to buy the dip, buy oil and copper and the reopening names instead of stay at home. Lots of confusion here, so we'll sort through it in a few days. You'll see the market making a final decision. But right away, you see a hint of the decision making here. Looking at the stay-at-home names, you see Zoom, Peloton, DocuSign outperforming today. Traders reverted right away to what they know. If they hear that COVID is making a comeback, they revert right away to the instruction manual from the Robin Hoodiots, which states that if COVID bad, you buy Zoom, Peloton, DocuSign. Forget about the valuations for now. We'll think about that a little later. Now, buying Zoom, Peloton, DocuSign back in March, or February rather, made a lot of sense. We do have COVID lockdowns, and the valuations for Zoom, Peloton, DocuSign, among other names, were still reasonable, so it made sense to buy them then. But now, the valuations are already out of whack, and you can't do that and repeat the playbook again. So we will see how the market will make a final decision in the next few days. Be careful of making a big commitment here. And we see, of course, big tech lagging due to the regulations and the bad news we've heard from the administration regarding social media. We'll cover that in a second. Be patient. Across the side of the aisle, we do have, of course, underperformance in the travel sector, airlines, and cruises. And you see a little bit of rationality here. Yes, the market overall was not rational, but if you dig into the details, there was a little bit of decision making. COVID cases rising in Europe, stimulus not happening. They did not run right away and buy airlines and cruises. At least they made a lot of dumb decisions today, but at least this one is not among them. And of course, the notable outperformer here in the reopening names is General Motors, up significantly today. And now to the headlines that shaped the day, plus earnings reviews. Starting with the stimulus fiasco. Right away in the morning, we heard from the administration folding, and we heard Mnuchin saying, hey, we'll agree with whatever Nancy wants. If she wants new language about testing, no problem. And Trump came out and said, hey, we can go even more than 1.8 trillion. We can go even more than what Nancy wants. We'll give Nancy whatever she's asking for. Trump is on his knees, of course, begging, and it's a very pathetic look, especially when you know that Nancy is not interested in a deal at all. She's not going to hand you that win just a few days before the elections. Furthermore, we do have another side in this whole fight. It is a triangle now. It's not just Nancy versus Trump. We do have McConnell now in the mix. McConnell is the biggest obstacle right now. Ironically, he does not want a big stimulus bill. McConnell is saying, I'm going to stick to the $500 million worth of PPP loans. Of course, because he wants his cronies to loot the program again. And at this point, McConnell is pretty much betting that Trump will lose the elections, but he wants to save the rest of the Republican Party. And it didn't take long, of course, before Nancy saying that they will not wait, or she will not wait all the way till January for a bill. So a little bit of confusion here. And here is a summary of all the fiasco today. Of course, they're all not interested in a deal, exception of Trump, but they're also interested in propping up the market and preventing a big market crash. And you see all this conflicting information and statements from Mnuchin and Trump and McConnell, then Nancy trying to rescue the market, and we all know they're not gonna do a full stimulus deal before the elections. End of story. And now let's move on to Europe for a change. And we haven't talked about COVID for a while, but COVID is ravaging across Europe. And you see many countries declaring a state of emergency, and Europe's biggest city, London, is now facing a potential lockdown. Perhaps it is an entry phase of the lockdown, but if cases continue to surge, you bet they're going to do a full lockdown. There is no other choice here. Even though the British economy is in shambles, and we covered that they had the biggest economic decline since the World War era. But we do have further news here from Europe that affected the markets here in the US, specifically tech names. We have news that France and the Netherlands, or Holland, depends on where you live, teaming up to break up big tech in Europe. Furthermore, the European Commission announcing new tariffs for American products, and you see Trump right away responding, saying that he will hit back aggressively against any tariffs from the European side against American products. So here we go. The wall of worry and all the concerns that we have add to the mix a revival of the tariff wars, yet the market did not care today. Put your blindfold in, plug your ears, nothing is going on, buy. And of course, big tech is not just in trouble in Europe. It is in trouble here in the US. And now Congress is thinking about a subpoena for Jack Dorsey of Twitter. There was a controversy overnight regarding Twitter censoring an article about Hunter Biden, Joe Biden's son. And now we hear a lot of pressure and concerns that perhaps big tech is interfering in the elections. And you bet politicians will hold that against big tech names, and they will try to break them in the future. So if you think that the 2020s are just going to be a repeat of the 2010s, where you just buy tech names and they fly higher, they double, triple, be careful. Those days are over. They will regulate big tech, not just in Europe, but across the globe. And of course, they have this chick that is hired to do some propaganda in the press on behalf of the president. And she's not happy, among many other Republicans, that Twitter blocked their account for retweeting the article regarding Joe Biden's son from the New York Post. So expect more scrutiny here against big tech in the days and weeks to come. Specifically, if Trump starts to decline in the poll and Facebook and Twitter censor more articles, you bet he's gonna do some erratic decision to hurt big technology names. Moving on to the Federal Reserve. Any news from the Federal Reserve today? Not really, but we do have the Dallas Fed President Kaplan. And breaking news, President Kaplan just figured out that disadvantaged Americans in desperate need of help and aid. And I don't know why they picked this picture for the article, because here he is sitting in a $10,000 chair with his legs crossed, and he's saying, oh yeah, these disadvantaged Americans, somebody gotta help these poor sons of bitches. Not the Fed, of course. And of course, speaking about poor sons of bitches, here we go. The unemployment picture in the country is not getting any better. In the morning, we heard the news that we had 897,000 weekly unemployment claims versus expectations of 825. So we're trending back up in the unemployment picture. Again, bad news, worrisome news, yet the market pushed that aside and decided to buy the dip and rally for now. Keep that in mind, because all of these disconnections will connect at some point and will create a massive jolt in the market. Keep that in mind. But perhaps the biggest story of the day, and really the biggest shock that we heard from the New York Times. Very important story, and I recommend that you look for it and you read it. Remember back in February when we didn't have any COVID cases, at least we didn't discover them yet, and the market was trading at all-time highs and everything was hunky-dory. Remember that the propaganda minister, Larry Kudlow, came out and said that the virus is contained.
I just want to say, though, as far as the U.S. is concerned, when you look at this, I mean, you had a little higher head count on the infections because of the cruise ship people coming off. We have contained this. I won't say airtight, but pretty close to airtight.
And of course, per usual, assuring investors not to panic and to go ahead and buy stocks. However, here is the revelation. Turns out that the White House had private contact with hedge fund managers and billionaires, and in those private contacts, they've warned them that COVID is not contained and it will be a big, massive problem health-wise and for the economy as well. And here's a quote. One of the hedge fund managers said they basically told us to short everything. We see names like Cohen and Ackman and Tepper, all these billionaires from the hedge funds made a killing shorting the market right before it crashed. Massive story, and it shows the filth and the corruption that's going on and the market manipulation that goes on unpunished. Of course, after the bill, we heard the news that Senator Warren is now, I don't know what she's doing, but she's basically screaming and barking about it. I don't know if anything is going to happen or any punishment will take place because, per usual, this is America. And if you're rich enough, you can get away with the most egregious of crimes. However, if I had some information here, insider information, and I share it with you, and we do a trade, you bet the SEC will catch us and put us in jail. Two systems of justice here. And by the way, looking at the article, why the hell isn't Propaganda Minister Kudlow wearing a mask in that picture? You see the poor makeup artist wearing a mask, and here he is standing with his COVID breath, no concern whatsoever for other human beings. Moving on, and let's cover some earnings here. In the morning, we had earnings from Walgreens. Walgreens, of course, crashed last time they reported earnings, so the expectations were already in the toilet. All they had to do is beat just by a little bit, and the stock would rally. And here are some of the results. Their same-store sales are up 3.6%, and they're predicting single-digit growth in the coming year. Furthermore, they're of course upping the dividend. They increased the dividend because it is a shitty stock and you need to increase the dividends to attract investors here. Moving on across the street to Morgan Stanley. And of course, you know that I'm bullish on Goldman and Morgan Stanley. I told you this before the earnings reports were even announced. But I'm more bullish on Morgan Stanley than I am bullish on Goldman Sachs. And you saw Goldman Stanley, or Morgan Stanley rather, doing very well today. Their trading revenue up 22%. And of course, let's stop here and point something very important. We do have two Americas since this COVID crisis started. The haves and the have-nots. The haves, the pandemic is the best thing that ever happened to them. The stock market is up, their wealth increased significantly, and everything around them got cheaper. They are scooping up properties, yachts and cars, no problems whatsoever. And we do have the have-nots, the poor and the middle class. And these people lining up in food banks begging for a loaf of bread. You see that same divide of two Americas in the banking sector. Goldman, Morgan Stanley, even JP Morgan cater for the rich, and they did very well in their earnings report. Bank of America is more of a middle class kind of bank. It didn't do so well. Wells Fargo, of course, is the poor people's bank, and you are well aware how miserable their earnings report is. But continuing here in Morgan Stanley, here are their financial results across different segments of their business, and you see they're experiencing very impressive year-over-year growth across the board. And as expected, the trading boom and the gambling mania in the stock market and the bonds market is evidently very, very good for banks. And you saw that it saved JP Morgan's results, even Citibank to a certain degree. And you saw the impressive results from Goldman Sachs, all related, of course, to the trading and gambling mania in the stock market. Well, Morgan Stanley is no different here. And you see their underwriting revenue doubled. This is, of course, from the IPO mania we've witnessed so far this year. And of course, their trading revenue, as you can see, equities and bonds increased very, very decently during the quarter. And now let's move on for the technical analysis and let's cover some charts, starting with the SPY, the S&P 500. Here is a 15 minutes chart, no markings or annotations by me, and here is what I see. I see, of course, the SPY caught support early in the morning at the level that we've identified previously, the 243.70. You see that there is no coincidence here. The trend line support worked perfectly. And then throughout the day, you saw the buy the dip crowd pushing the index higher and higher, and we faced prior support, now resistance at the level of 246.80. It was a little bit of a struggle, as I'm highlighting from my drawings on the chart. However, you see the SPY managed to break above the resistance, and now the same level becomes support. Here is another look for the SPY chart from a 15 minutes perspective. You could argue that all we're doing right now is a bear flag formation that will eventually break and trend to the downside. But of course, there's a lot of room here for the SPY to make some gains here before any reversal takes place. That is of course one perspective, but we need to look at the bigger picture, the daily chart. And when we do that, we see that all what the SPY did today is filling a gap on its way down and then filling another gap on its way higher. And you see the SPY closing between in no man's land now, closing two gaps, yet not closing either above or below any of them, meaning that the SPY is neutral now, and we will do the thinking, the digestion of all the news and the factors we heard today, and you will see the SPY perhaps making a final decision as soon as tomorrow, whether it wants to rally all the way up, and that was it, it was just a dip to buy, or whether there is further decline here. My bet is that the news, and there are so many negative factors here that will impact the SPY, and you will see us trending lower, and you will see that bear flag playing out. And now, moving on to the Qs. The Nasdaq, 15 minutes perspective, nothing happened here. All we did is we caught support from the 286.30 level that we've identified before. However, technically we did not fill any gaps, not the lower gap and not the upper gap you see right in front of you in the chart. Unlike the SPY, of course, which leaves us in no man's land, and anything could happen in the Qs right here. So let's switch to a daily chart and see what we can find out. Obviously, the Qs is making a lower low here from the all-times high. It did not even manage to go all the way higher. Now, let's not run the events ahead of time. The question becomes here, is this just a little bit of a retreat, caulking the gun, and then marching higher, trying to challenge all-times highs? Certainly possible, and you might have heard from other technical analysts that we are seeing a cup and handle formation. For me, that is too early to assume yet. We haven't seen the handle formation yet. What I see is the daily MACD curling down, and I see today just a knee-jerk reaction of buying the dip in the Qs, but we will go lower and we will close the gap that we did not technically close today. And perhaps we will consolidate in the level of 276. This is a prior consolidation level, and it is very reasonable that we will take a break in case if we decline further from this point on. But again, looking at the SPY and the Qs, you can't really make any assumptions here. The charts are not speaking to us and not telling us any critical information here. So let's move on and see if other charts tell a different story. Starting with the dollar index, 15 minutes perspective. We talked about the cup and handle formation, which is bullish, and you saw the dollar index blasting higher in the pre-market and of course reaching the prior level of support. Now resistance of 93.50. It struggled as I'm highlighting in the chart, and then after the struggle it broke out. It managed to break out significantly above the resistance line, and now that resistance line of 93.50 becomes support. And all in all, the action in the Dixie is very bullish here, which means rationally a bearish outlook for the equities market, oil, and gold. But this is not what we saw today. And again, the theme of divergences and contrasts and conflicting information here, the confusion. We'll try to sort it out in the conclusion. But for now, moving on to the VIX daily chart. Nothing new here. We saw the VIX popping up in the morning and then fading away as the trading day progressed. We've seen this behavior happening over and over and over. And the reason is we do have a bunch of morons shorting the VIX aggressively, bidding that the VIX would decline instead of rise during an election season. And the VIX is not going to manage to break and force these shorts to cover unless we have a significant jolt to the system. Remember that back in February, before the market crashed, on Thursday we started hearing about the COVID cases rising in Europe. Nothing happened. Equities in America kept gaining and the VIX was muted. On Friday, same story. We heard the cases rising in Italy significantly. The market brushed that off. It declined just a little bit. However, on Monday, the following week, that disconnect connected and finally the market had that big jolt that, hey, wake up, the threat is real, and you saw the VIX exploding to the upside and the market crashing. Are we heading to that scenario? It looks very similar, and you bet that we're going to have a second wave just like Europe very soon. Moving on to another piece of conflicting information in the TNX that tracks the 10 years yield. You see traders here selling bonds, which causing, of course, the yields to rise higher. So while in the morning we saw the panic with oil down and the TNX down, the dollar higher, as the day progressed, the dollar remained higher, but oil caught a bit and bond yields caught a bit as well. Very, very confusing day. What's going on with the IWM? This was another indicator, if you've been watching it in the morning, that we will reverse and trade higher in the Qs and the SPY and the Dow Jones, because the IWM caught a bit from the beginning of the day and went in a straight line all the way higher. It managed to struggle a little bit around the resistance line of 161. However, once it broke through that level, you saw a massive surge higher. Moving on to the chart of Apple, 15 minutes perspective, you see a series of bear flags in Apple's chart. Today was no different. We saw another formation of a bear flag. The assumption here is the bear flag will play out just like the bear flags before it to the downside, and perhaps we will revisit the 117 gap in Apple very soon. What's going on with Tesla? If you remember yesterday, we identified the new trend line. This is in the micro picture, the 15 minutes picture. And I told you, don't be surprised if you wake up in the morning and you see Tesla down 2%, revisiting rather the trend line. And then from that point, it could bounce back up. And that would be very bullish behavior. However, revisiting the trend line, breaking below it, is very bearish. And this is exactly what happened with Tesla today. Breaking the trend line, trying to reclimb it, try to revisit it, specifically the 453 level we identified before the week even started. And you see Tesla struggled and it finally gave up and trended lower. And that is very bearish behavior from Tesla here. It should have been able, if it had the momentum, to climb back, bounce from the trend line and trade higher. Because even as we saw big tech names rebounding and trading higher, Tesla remained muted and remained trading in the lower side. It did not catch the same bounce that other big tech name and momentum names got throughout the day. Very notable here. And now let's move on to conclude this video. Here is the summary. The dollar index is up. Treasury yields up. Copper up. Gold up. Oil up, equities well above the lows. Let's just give them an honorary up. What do you make of all this information? Very conflicting. Which one of these indicators will be proven right? Who is telling the truth here? On one hand, Team A, we do have the VIX, the dollar index, and on the other hand, we do have the TNX, oil, copper, gold, and stocks. Which team is telling us the truth? Team A, and if Team A is correct, that means we do have further declines in the market to come. Or is it Team B telling us the truth, which means that today was just a temporary panic in the morning, equities will trade higher, the dollar index will fade, the VIX will fade in the next coming days? Here is my take. I trust King Dollar because King Dollar remained higher. It did its move before everybody else during the pre-market, the overnight session. It was the leader. It remained on solid foot. It did not give up, even as the players in Team B caught a bid and traded higher. The dollar did not budge. Furthermore, we've heard a lot of attempts today to prop up the market regarding stimulus, which is supposed to drag the dollar down. The dollar did not budge. And for that reason, I do trust the dollar. If we see the dollar declining overnight, then there is your answer, that Team B was right and equities will trade higher. If you do see the dollar rising again overnight, then it means that Team A is right and equities, oil, gold, copper, treasury yields will all trade lower in the days to come. Now I want to hear from you. Who do you think is telling the truth? Team A of the dollar index and the VIX, or is it Team B of oil, copper, gold, equities, and treasury yields? Let me know in the comments. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.